5 lessons Evergrande taught us about the Chinese economy. Hello guys, and welcome back to Engineering Progress. In today's video, we are going to be looking at the recent dip of Chinese company Evergrande and the lessons learned. This is going to be based on an economic point of view. Want to know more? Do stick around and hit the notification bell for more videos like this if you haven't already. Evergrande is one of the biggest business franchises in the whole of Asia. It owns a shopping mall, a bunch of buildings, and a football team. Evergrande Group Limited is a Hong Kong company. It's been around for more than 20 years. On Tuesday, the company announced its financial results for the last 3 months of 2021. The results look worrisome. They showed the company's debt rise is now over $300 billion. Some commentators have called this a story of hubris. The company had so much debt, they said, because Evergrande put its own ambitions ahead of financial discipline. But there is another story, perhaps more interesting. Evergrande was born in the boom times that followed China's entry into the World Trade Organization in 2001. That year, one of China's biggest state-owned banks lent Evergrande $1 billion to buy land, start a real estate development company, and invest in other companies. In 2014, it was the largest real estate company in the world by market value. The loan was approved without any apparent regard for how big or risky or ambitious the projects might be. And it turned out that they were very big and very risky indeed. The bank expected Evergrande to pay back the loan by selling everything at ever higher prices. It would make money on the rising prices as well as on servicing its interest payments. But when China's economy began slowing down in recent years, Evergrande stopped making money quickly enough to pay off the loan. Evergrande also announced it would be cutting its workforce by 1,300 people, about 8% of its workforce. What really happened? The company represents what is called shadow banking in China, companies that seem to do something other than just lend money or transfer it around the system, but probably aren't very good at either one. Like many Chinese companies, Evergrande appears to have borrowed heavily to buy up things it didn't really need to buy up. Instead of working to pay back those debts, Evergrande has piled up more debt to pay off old debts it hasn't yet managed to pay off. This is not what you'd call an unusual situation in China. Many big firms are like this, ever larger companies with ever larger obligations. Evergrande was one of the largest property developers in China by sales, with the majority of revenues also coming from mineral mining, electric automobiles, and large-scale farming. China's growth model relies on investment and exports, both of which have slowed as the government tries to keep a lid on leverage and cool off the country's bubbly housing market. That means Evergrande and other developers face a bleak outlook, with fewer buyers and fewer places to put their money. The company's predicament offers a window into the challenges facing China, where economic growth has slowed to its weakest pace since 1990, threatening to drag down the global economy with it. Much of the world is counting on China to play a stabilizing role in the global economy as the US continues to ratchet up tariffs on its trade with Beijing. But some economists say that what lies ahead for China is not another cyclical downturn, but an instance of slower long-term growth, a new normal that could pose fresh challenges for global trade and growth. Today, through a combination of judicial rulings and administrative fiat, the Chinese government is assigning a much lower value to all land held by Evergrande than its price during the property boom, and far less than what Evergrande paid for it. The difference between these two figures is referred to as negative equity. After years of trying to hide their debt by transferring properties between subsidiaries, Evergrande finally admitted last year that they had over $8 billion in negative equity. The lessons learned. 1. Real estate has been a huge part of China's economic growth. Evergrande is also a real estate company based in Guangzhou. It is one of the most important economic stories of the past decade. A lot of people don't realize how important real estate has been to China's growth. But consider this shocking number. Between 2001 and 2011, Chinese real estate developers completed construction on over 8 billion square meters of floor space. That's roughly 20% more than all of France, including Paris. The real estate market in China is huge and accounts for a large part of economic growth. In the last decade, real estate contributed 29% to China's economic growth, more than the GDP contribution from finance, manufacturing, agriculture, and telecommunications combined. The The real estate boom has also been a major source of employment in China for the past decade. Real estate construction has been a huge driver of economic growth in China. If you're looking for one factor that explains why China grew so quickly over the past decade, this may be it. How did Evergrande get that big? And what does it suggest about how China's economy works? Well, there you have it. 2. The Chinese property bubble has created spooky, empty cities. Evergrande has built more than 200 ecological villages in the last 2 years, but the vast majority are far from welcoming. They are almost entirely empty, since buildings that have been hastily thrown together has no thought for aesthetics or even basic functionality. Like in Kangbashi, a new district in Ordos and China's largest ghost city, there are 30 apartment buildings and 2 public schools that can service more than 100,000 people. That is just the residential part of Kangbashi. The entire district is supposed to house around 1 million people. However, it is estimated that only around 20,000 people actually live there. Housing prices in these affected cities are so high that even migrant workers coming back after working for years in the cities cannot afford to buy an apartment there. As a result, many of them have decided to continue living in their old homes or to move to even cheaper places like South China's rural areas. Ordos provides a prime example of how China's property bubble has created spooky empty cities throughout the nation. Uneven development is the result of the government's attempts to control bubbles with administrative measures. The government is still trying to balance out supply with demand, instead creating a mismatch between buyers and sellers by discouraging private investment in housing projects. 3. The Communist Party's agendas to reduce financial risks. The Chinese Communist Party, or CCP, has always worked to prevent political liberalization. However, it may be gradually allowing some economic liberalization corresponding to Xi Jinping's 2017 strategy of reform and opening up. One example of this is the party's recent crackdown on excessively open real estate markets. To protect society, the CCP is no longer allowing private entrepreneurs to seek profit by speculative means. Instead, it is using public money to increase its own control over the economy. The second example is that the CCP has also recently begun to launch campaigns against financial institutions that are too big to fail. The CCP wants banks to change their business models, reduce risks, and improve transparency. It is attempting to prevent another crisis like the one China experienced in 2011. In an attempt to further rectify this problem, the Communist Party tries to eliminate business models that rely on subsidized land purchases and credit from state-run banks. Evergrande's collapse is a case study in how these efforts are playing out in China today. 4. Cronyism is key in major Chinese businesses. Evergrande was founded by Chu Jie-yin, who not that long ago was the richest man in China. He built his wealth not by inventing something or coming up with a new business model, but essentially by doing what all the other Chinese property developers were doing, building their network from home. Zhu practiced favoritism in business dealings as well as sentiments. Board members included his relatives and people he had worked with at another company he used to own. Everyone else had to pay for Evergrande stock, not just for their own shares, but also for those they issued to themselves, and then wait years before they could sell them at a profit. A similar pattern is common in other sectors of the Chinese economy. Family members hold top positions, others are forced to become minority shareholders. Everyone, even though not qualified, waits for years before they can make their own contribution to the company. 5. Evergrande might just be the beginning. Evergrande is a case study in how not to run an investment. It also illustrates some of the pitfalls of investing in China and even some of the pitfalls of investing in property in general. The company is now in default on its bonds. As long as they trade below par, there is a chance that holders will be able to recover some money by suing Evergrande's directors and officers for negligence and breach of fiduciary duty, though the chance of success depends on whether Chinese courts can enforce judgments against offshore assets and whether Evergrande has any assets in China that would be subject to such judgments. If they do recover, it will be from the pockets of the cronies who benefited from this scheme. The shortfall has turned into a rout. This week, Evergrande said it would sell most of its operations to secure new funding after it failed to pay interest on bonds issued last year. The proceeds will be used to repay existing debts, including another bond issue that was due this month. China's most highly valued property developer has turned into its biggest threat to financial stability. With that, we have come to the end of the video. If you enjoyed it, tell us what you think about these lessons and the plans made by Evergrande to curb this problem. Let's hear your views in the comment section, and please share and comment on our amazing videos. Also, don't forget to like and subscribe to our channel to notify a new video like this is out immediately. Have a great day, and see you later.